As our guest is ready to walk us through the report this morning. Let's see what that report holds for us as we make welcome this morning Oyinkansola Aregbesola, research analyst with ARM. Good morning to you.
Good morning.
All right, just before we go in, let's just tell you how you can be a part of the conversation. The WhatsApp number is 0809 981, and you can also tweet at smooth981. I'm also streaming live on YouTube, so you can catch that live stream and even post a comment on there. So on YouTube, it's smooth981. We're talking about ARM's rocky road outlook on Nigeria's economy, the reports.
So before you dig into this, Oyinkansola, the year was 1976, and the movie is titled Rocky, and it stars Sylvester Stallone, aka Rambo. So that's what flashed my mind as soon as I saw this title of your report. So, well, it's a new ARM macroeconomic report on Nigeria, calling it a Rocky Road to Resilience. Why, of all the titles you could pick, the Rocky Road to Resilience Recovery? Talk to us.
Thank you for that question. So, we titled our 2024 Economic Outlook Rocky Road to Resilience because of where we were coming from in terms of major policy reforms that, was implemented in 2023 by the new administration. And of course, looking at its pass-through effect on the economy. So, two major policy reforms like that were the premium motor spirit subsidy removal, popularly known as petrol, as well as the FX revaluation policy. So, looking at these two reforms, there are both positive and negative side to this. And for the PMS subsidy removal, looking at the negatives, we witnessed a spike in average petrol costs that fed into higher transportation expenses. Firstly, for businesses that rely on logistics to get their products to end users, and of course, for the end users, um, that is the average Nigerian, just by moving around, we've had to spend more on transportation, and that affected our wallets. And the positive side of the policy is that it will reduce government spending, and the expectation is for those funds to be diverted for more productive use. For example, for capital expenditure, because one of the things we're lacking is infrastructure. And if that is implemented, that would be a good move because of the ripple effect such investment will have on the economy. The positive side again to the PMS subsidy removal is the interest that we saw in the oil and gas sector last year. The expectation was for the sector to be much more efficient and effective, and it spurred investors' interest in that sector on the Nigerian Stock Exchange. Now, moving on to the FX evaluation policy, for the negatives, we've had to use like more naira to exchange a dollar, which is basically the position of the naira, and that affected businesses and individuals that would rely on FX for transactions. Specifically, companies in the consumer goods sector had to recognize higher finance costs or borrowing costs in their books due to some loans taken in dollars. Now, going to the positive side now, we witnessed investors' interest in the banking sector because obviously most of these banks had long position on USD. Now, what I mean by long position is the fact that they held more assets in USD than liabilities in USD. So, because of the devaluation, they were able to book profit in their financial statements, and that led to optimism, around the sector on the Nigerian Stock Exchange. Overall, the equities market, did well in 2023, recording a 45.9% gain. So those were the positives and negatives. Now, that actually informed the title of our report because we believe that the economy would eventually benefit from these reforms, if well implemented. But then before those long lasting benefits becomes apparent, we would see some hiccups here and there, just to get to that point. Hence, rocky road to resilience.
All right, thanks for that. Let's talk about some of the projections from your reports. Economic growth is the projection for that ranges from 2.09 to 3.24%. Base case projection 2.71%. So what exactly is the driver for that projection?
All right. So our projection is, basically, based on the fact that, we're expecting some optimism around the oil sector in terms of growth in that particular sector, and it's based on our expectation of higher crude oil production, given the government's effort in curbing oil theft and pipeline vandalism, as well as the fact that Dangote refinery is coming on board. So for the non-oil sector, we believe the sector would recover from the effects of the policy, that was implemented in 2023. And they were particular about the services sector, spearheading growth within the non-oil sector, primarily driven by steady performance in the financial services and the ICT subsector. That's the information and communication technology subsector.
Well, still staying on projections, your report has an inflation outlook, which I'd like us to briefly look at. In the base case, an average inflation rate of 24.39% is projected, while the bull case is about 23.51%, and the bear case is about 25.76%. What are the triggers for these projections of yours from ARM?
All right, so we considered several factors in making each of these projections. For our base case scenario is based on a slight improvement in FX supply levels, when we compare that to 2023. And then, and based off of that, we, project an exchange rate of about 800 to 850 naira to $1, and an average, PMS price of 650 naira per liter, and a 15 to 20% enforcement of electricity tariffs and stable food supply. But for our bull case scenario, that's for our very optimistic case, we considered significant improvement in FX supply levels. And of course, that should feed into currency appreciation, because if we have more dollar in the system, currency will appreciate. So we expect an appreciation of, to 700 to 750 naira to $1, and an average PMS price of 600 naira per liter, because we believe that where currencies where there's currency appreciation, it also impact the price of petrol. And we also expect no enforcement of electricity tariffs and an increased food supply. And so that's for our bull case scenario. Lastly, for the bear case scenario of about 25.76%, it's based off of the fact that FS supply will worsen in 2024, and Naira will stay above 850 naira to $1 in levels, and consequently average PMS price will over around 800 naira per liter, and the postponed 40% electricity tariff will be fully implemented. And lastly, food supply will worsen.
And just before you go on, if you just joined in, you're listening to Business Express. We would like to get your thoughts on relating to ARM's latest macroeconomic report titled Rocky Road Outlook on Nigeria's Economy. So let's get your thoughts on to 0809 WhatsApp messages only.
Now, let's coming back to this report. It says that it expects the central bank to maintain a rather hawkish stance. So I'm curious, and I know a lot of people are as well. What's the definition of a hawkish stance, and what exactly is a dovish stance?
Right. So a hawkish policy stance favors hiking or increasing interest rates. And when I mean interest rate now, I'm referring to the monetary policy rate of the CBN. Now, the monetary policy rate is basically like a pause for all other interest rates in the economy. For example, if the monetary policy rate is increasing, banks would have to reprice their loans, that is, increase the interest rates, charged on loans. So the main goal for maintaining an hawkish position is to keep inflation in check, at least the demand side of it. On the other hand, when we say dovish stance, now dovish policy stance, favors in reducing interest rates, especially in a deflationary economy, or where the primary goal is to stimulate economic growth. So dovish monetary policy favors an easy money environment where the CBN cuts down interest rates, which makes it easier for businesses and consumers to obtain loans.
Well, we will not have to wait long to find out what the CBN intends to do with the MPC because they fixed a meeting already for next month already. The date is out already, the first for the year. But let's get on to you quickly closing this up, relating. So why do you expect the CBN to remain hawkish in this regard?
Thank you. So our expectation of a hawkish CBN, at least in the first half of the year, is based on the CBN's mandate of keeping consumer prices stable. Although there should be a trade-off between stimulating growth and stabilizing price levels. We think the CBN's focus is on keeping prices at bay. Therefore, we expect the Monetary Policy Committee of the CBN to hike interest rates in the first half of the year, just to curb inflation.
All right. So I'm curious about this. What's the impact of on borrowing costs and other metrics if this hawkish stance is maintained? We're speaking with Oyinkansola Aregbesola. She is from ARM. She's an investment research analyst. And we're talking about ARM's rocky road outlook on Nigeria's economy. Let's go on to some of the messages that we have coming through.
First off, we had El Como who sent in anybody, anything, whatever will go to touch electricity. Take your legs off high tension. So El Como comes up, he says, electricity tariffs have been frozen through 2024, so no increase at all. El Como's thoughts, so wanting to disagree with Oyinkansola there. Then Wahid comes up.
Wahid says, nice work by ARM. Increased revenue is good, but my concern is the wholesale corruption and extravagant, wasteful spending of the government, which is ending the intended benefits. How can I get a copy of the report? Best bet will be to look on the website. You can find it on there. And let us know what you think when you get through this report. It's about the rocky road outlook on Nigeria's economy. There are projections of growth, economic growth. There are also projections on inflation as well, and what stance the Central Bank of Nigeria is going to take now. I feel like I went to school today.
Really, it's a 101, economics 101, really great one. And Oyinkansola, if you're still there, Oyinkansola, let's do quickly wrap up your trade this morning.
Indeed. And don't forget the WhatsApp number is 0809 444 981. And we're also streaming live on YouTube. You can catch that live stream up on our YouTube page. It's Smooth 981. And don't forget to subscribe. On that note, that is all the time that we have for Business Express this morning. Thank you so much, Oyinkansola Aregbesola, for being on the show with us this morning. And it's the report is called ARM's Rocky Road Outlook on Nigeria's Economy. It just seemed like Oyinkansola wants to say final goodbye to us, but let's look at the message coming through from Gilbert.
Gilbert Musa's message here would tell us, well, in addition to your Analyst 2024 outlook, we need to make security number one. If people are not secure, these projections will tilt towards the negative scale further. Oyinkansola, well, the network is not going to connect us. Thank you so much for your time. And that's a wrap on Business Express on Smooth 98.1 FM.